Hey, thanks for joining me today of IRSMedic, and I am thrilled for a few reasons why. Number one is that tax reform is actually in the news, and for tax nerds like myself, our content is getting a lot more interest right now. It's incredible, and not only that, it's getting so much more attention. I have none other than Jim Bennett of FairTax on the show right now to talk about the fair tax proposal at a time when everyone's talking about tax reform. So this is going to be, I've been looking forward to this, and I'm just humbled to have Jim on the show. Thanks for joining me, Jim. Thanks for joining us and sharing us what the fair tax is going to be.
Oh, thanks, Anthony, for having me back. And your introduction is more than generous.
But you've been a part of. We're going to get into it. So now, look. Here's the thing. I'm going to be honest with you. I have problems with the fair tax. I do, and I've done a video on it, explaining my problems. I shared it with Jim. I've shared my video with Jim, so he knows exactly what my points are. And we're going to go over that. So we're going to have a really robust debate that is certainly going to go a little bit deeper than the issues. And Jim and I were talking before the pre-show. Jim was mentioning, a little bit more than the Fox News soundbite, a little bit more than that, to say this is how it really works, right? So we'll get into it. All right. So, right now, as we say, Donald Trump has proposed a whole bunch of things. And really right now, I want to get into Jim's background a little bit, just so you can understand where he's coming from. So Jim was a fair tax advocate, right? Before the fair tax was in existence. And you decided that consumption taxes were probably the best way to do that. And you first heard about the fair tax on the radio in 2005. And I didn't realize it was around that long.
That's absolutely right. I think to my wife's consternation, I was listening to a radio talk show host named Neil Bortz, and he's not in the New York, Philadelphia market. And so he's everywhere else in the United States. And he started talking about this thing called the fair tax, which was a consumption or sales tax. And as soon as I heard it, I was already a convert because of what I thought previously. And I said, I have to get on board. So my wife, even though I'm retired, my wife doesn't think I am.
Well, and Kim, this is what's going on right now. There's been a lot of tax reform ideas going on. Most people don't realize the grassroots have been working a long time. We've been working a long time on a lot of things, and we get pretty much no press because nobody wants to talk about taxation. We all kind of want to ignore it doesn't exist. Now, Jim, you're also an attorney yourself.
Yes.
Right on. And you took international law, and you lived in Germany. Wait, you're Army JAG?
I started as Army JAG. That's how I ended up in Germany. But I was one of the 0.1% of military personnel who got out of the Army and stayed there. I got a job with a German insurance company named Gerling Concern. I won't bother you with the full German name. And I was in Cologne for 3 years, and I was transferred to New York. So I got firsthand experience in the liability department of a German company.
Well, then firsthand the problems for Americans overseas, and why Donald Trump's promise to end double taxation overseas is so important. Firsthand how awful it is to be an American facing the U.S. tax system abroad.
Oh, I absolutely do. I was basically Americans and Eritreans. That dictatorship in Africa are the only two countries that tax their expats who live outside the country and maintain no residence in the country. If, let's say, a German citizen works in New York, the German citizen doesn't have to work with the German Finanzamt, just the American Internal Revenue Code and Internal Revenue Service. So it's unfair, even though I didn't pay any American tax, because you get the worst of both tax worlds. For example, things that are deductible in Germany are not deductible in the United States, and vice versa. Things deductible under the Internal Revenue Code are not deductible in Germany. So either way, you can't win. And then something came up after I already came back to the United States that luckily I didn't have to deal with when I was over there. It's called FATCA. It's an acronym. I think it's Foreign Tax Account.
Foreign Account Tax Compliance Act.
Yes.
Well, that's actually what brought me together with John, the great John Richardson, and the entire Solomon U. It was FATCA. is what brought me into the effort to the advocacy work that we've done on eliminating a double taxation. So that's what united us, that terrible law that honestly, and for those who don't know, FATCA is such a brutal law that it forces banks to scour their records for people suspected of being American. What this means, and if they don't do it, what could happen is the wires coming in from the United States government could be subject to a 30% levy, meaning that with the US dollar, the reserve currency of the world for now, it basically will end their bank. If the bank isn't in FATCA compliance, it could actually destroy the entire bank. So just a few Americans can bring down a big bank. And so the response has been, well, maybe we'll keep you, but maybe we'll get rid of you. Maybe we don't need, no foreign bank needs Americans as customers. And so many of them have been getting them off. And so that's really what's bringing me aboard to a lot of this. So, firsthand the problems of tax code. Now, this is what I'm going to say. Hey, then what's the problem here, Jim? We have Donald Trump is promising to end double taxation for Americans overseas. So wouldn't that alleviate the problem of an abusive IRS?
Oh, gosh. We think the tax code is a playground for politicians. It allows Congress to spend money through the tax code so that people don't see the expenditures that are being made. The tax code, it's intrusive, it's inefficient, it's unfriendly, it's a deadweight to economic growth. It's unfair, and it's discriminatory. And I'm sure you can go on with a number of other things, and we do need a system to replace it. And Donald Trump has come up with a few ideas, like no tax on tips, no tax on overtime,
and ending double tax. Those are the three big ones that he did: any double taxation, no tax on overtime, no tax on Social Security. So some pretty big things. But at the same point, and this is sort of where I'm like, well, what's actually going on here? At the same point, he's like, yeah, I'm going to give all this relief, and also I'm going to go to an all tariff system as well. So we don't need that relief. If we're going to eliminate the IRS, then we don't need to do all these things. And so I'm not exactly entirely sure what's going on and what's really possible. So let's just work in this way. Let's assume that there needs to be a replacement for the IRS. And let's assume that, okay, look, tariffs have had problems, Jim. Historically, tariffs can be used to abuse certain people and reward others. And this has been done, it can be done quite easily. And the government has done it. 1825, the Tariff of Abominations. Almost South Carolina also almost seceded. And then the Morrill tariffs that caused the Civil War. That's actually the cause of it, is that Lincoln offered to enshrine slavery in the Constitution as an amendment. But as long as the South paid the tariffs, the South didn't pay we can't pay the tariffs. So slavery doesn't matter to us. And so there's the point for all those who believe slavery was the cause of a World War or the Civil War. It can't be true because the South didn't value it as much as not being taxed to death. So tariffs can be awful and can certainly be awful and create these weird perversions in the marketplace, right? Winners and losers are all over the place. So let's assume that the tariff isn't a workable solution. And let's assume that, we need to get something other than an income tax out there. So tell me why the fair tax, what I want to know is why the fair tax is the best thing. So maybe if you can get into how it operates differently than tariffs So how does it operate? Let's go with tariffs. I think that's probably a simpler explanation.
Sure, and I think you could argue that the Hawley-Smoot tariff was the cause of the Great Depression, and you could also point out that countries retaliate with tariffs. So,
thank you. That's actually right. I forgot about that. That's right. Absolutely. Tariffs can be incredibly destructive to a country, and absolutely, the Smoot-Hawley really had a devastating impact on America that was already suffering a lot. So absolutely, Jim. So let's go over. So tariffs can be abused, but let's say, well, okay, well, what about this? Because Trump did mention a golden age of tariffs between about 1880 and 1912. So what about so more reasonable tariffs? What are some of the problems with, say, because bad tariffs, we already know. Hey, look, we're going to have war. We're going to have mayhem. We're going to have bad things happening. But what about just reasonable tariffs? What would be the problem with just, reasonable tariffs that are sort of, hey, what are other countries around the world doing? Okay, that's going to be our tariff rate. So
Well,
what's
I
the
think
problem
one
with that?
problem you have with the tariff, Anthony, is the tax base. Because if you have tariffs that are too high, then they're not reasonably revenue raising, and the tax base fluctuates, and it's unstable. And there's a better way, and it's called this is what I'm here for, the fair tax.
Okay.
And the fair tax has a much broader tax base. It's larger and it's more stable, and it funds the government so in times of economic expansion, the revenue doesn't rise as much as it does under, let's say, income and payroll taxes. And in times of economic recession, the revenues don't decline as much, and so the government has much more on hand to when there's a lot more demand on social programs. So overall,
Okay. I never. You know what, Jim? I never appreciated that argument before. I understand now. I understand. So what you're saying is that, hey, look, with an income tax, the government is relying on how much people are making then. But with the consumption tax, hey, look, the government is gonna have more money when people are consuming. But why won't they spend it all like they always do, or spend more than what they get? I guess So I think that's one thing. So we have a larger base, and then and I think the larger base point is huge, Jim, because exactly the problem of tariffs is this: when you have a smaller base, well, then you can kind of pick who your base is, right? And this is sort of the thing when people's like they don't understand how you can kind of hammer certain people with well, it's a universal tax. What's the problem? We're taxing all imports at this percent, but certain industries are relying on imports and certain aren't. And then in the Civil War, really what the problem was is, look, the South was agricultural. It didn't have any industry. And the South needed a lot of farming implements. And those farming implements were made out of steel. A lot of those farming implements were imported from Europe. The North wasn't making them, and it wasn't really, and the South couldn't make them themselves. So when you had import tariffs affecting the whole country, well, no, it didn't. The Republicans and the Republican Party very specifically created this tariff because they knew what it would do. It would require the South to fund basically the entire government. But what the Republicans, what Abraham Lincoln did is he's like, well, we don't want them deciding where the money goes. So the people that you're taxing get no input on where the money went. And that was the untenable problem of the Morrell tariffs that led to the South had no choice. They couldn't afford them. So that's the problem. And I think that's the big problem with tariffs is it's very, very easy to pick winners and losers. Whereas a sales tax and again, not to jump the gun on how it works, but just the fair tax only applies to new goods. Is that correct?
That's correct. Maybe just to go through a primer on what the fair tax is.
Yes, let's do that. Yeah.
Okay.
Yeah.
First of all, it's a bill in Congress with 30 co-sponsors, so it's not a pipe dream.
Oh my God.
And what it does is it replaces is the operative word. It's not an add-on to today's income taxes, payroll taxes, and death taxes. But it does replace subtitles A, B, and C of the code. So those are your income taxes.
Oh, okay.
Yeah. So it's income, which is your wages and salaries, your interest and dividends, your capital gains. Your alternative minimum tax goes away, even though that doesn't affect a lot of people. It affects some people. It replaces death taxes, and it replaces, and this is the big one, this is the big gorilla in the room, it replaces payroll and self-employment taxes. So
okay, well, I got to talk about that. That's huge, because a lot of my self-employed clients, the money isn't so great. You're working a lot of hard, and then time and time again, hey, your federal income tax is nothing. All right, well, why do I have so much money? Self-employment taxes.
That's right.
Every time. And here, and when you're talking about expanding your base, great comment right here. Here's the difference here. If someone's a tourist, someone's a visa holder, anyone visiting the United States is now a taxpayer, right? Whereas if someone's visiting the U.S., unless they're meeting the substantial presence test or it's U.S. sourced income, it's not taxable whatsoever. Not at all. So that's a big point. Thank you very much. And by the way, we're going to get to the comments at the end too. I just saw that one there, and that was pretty relevant to supporting that. So you got comments? I want to get to them all at the end. We're just so exciting to have taxes in the news. So it's a thrill for me. So gets rid of the payroll tax. Well, okay, all right. Well, Jim, I want to give you your primer, but I gotta ask you this question though. Well, then how does Social Security get funded? How does Medicare get funded?
It replaces all these taxes dollar for dollar, so it's revenue neutral, and that's an operative word, with a consumption tax on all services and all new tangible goods. And the new and tangible is important. It doesn't tax your interest income. It doesn't tax your dividend income or things that are intangible. But when you buy a toy for Christmas, or it does tax food in the grocery store. So we're going to get to that.
And that right, and I got to that, and I'm like, this is crazy. What are you guys doing? You're going to have a regressive tax. What do you mean by that? And yeah, we'll hold off for that because you got something for us.
Okay.
All right. So, so what are the other ways it operates differently?
Okay.
And, yeah, go ahead.
Yeah. First of all, it's revenue neutral, so we don't make a judgment about what the government ought to be spending its money on or how high the federal government should be. The budget should be. We don't, unfortunately, we don't replace the debt, but you can't do everything. So we replace it with there's no tax on business to business. There's no tax on export. So for the first time, as opposed to tariffs, you have a border adjustable tax. So we tax imports when they're sold in the United States along with domestically produced goods. But when goods are exported, there's no tax on that, and there's no tax on business-to-business transactions.
Somebody just commented. Thank you, Randy. We just got a transition tax. Transaction tax is cascaded and embedded in prices. So that is what he is saying, and I think that is the key here. How it works is a transition. It's a transaction tax.
Mm-hmm. That's right.
And I have my problems with that. We'll get that to the end.
Now, one of the differences, if I may, between that and a VAT is that a VAT taxes every stage of production and distribution up to the final retail sale, and there tends to be compounding, just as with interest, whereas we only tax the final point of retail sale. But we still have control over the interim because anybody who's in business has to register as a seller. So I worked for the state attorney general's office in New Jersey, and we have a lot of they have very sophisticated ways of controlling sales taxes, which is what this is. I don't know if I want to get into the evasion issue right now.
No, we're going to get that to the end. Those are going to be my cross-examinations of you, Jim.
But basically, we don't tax income when it's earned. We tax income. We tax your money when it's spent. And basically, it's a wealth tax at the point when wealth is consumed, not the point when wealth is saved and invested. So.
And that, and why that's so important, because essentially what you're doing, it's basically all of your income is in a 401k. It's all, no, it's even better than that. All your income, there's no taxes on it. So what that means is that now it could grow tax free. Mm-hmm. Now that money could grow tax free. Now, whatever it's making actually has to pay some fair tax down the road, but you're starting with a much bigger base to leverage off of because it's not immediately chopped, right? It's not immediately chopped. And so this is the point I'm trying to get across. Think about the deferral, the inherent deferral allowed with the fair tax that hey, look, you earned your income this year, but you might not spend what you earned as it's growing until 10 years down the road when you're buying a house or whatever the case is. So it inherently allows a lot more deferral, which is great for Americans to grow their wealth.
Precisely.
Again, whatever your investments are, if you're, hey, look, how'd you grow your wealth? Well, I invested in a McDonald's. Well, good luck with that anyway. But your McDonald's has to pay the sales tax. So it's there. So it's not growing tax free, but rather you are deferring it because there's still some inherent taxes in there, of course.
Yeah, that reminds me, back in the Pleistocene when I was in law school, I had an income tax professor that said there's two ways that wealth is created:
Yeah,
people at work and property at work. In other words,
that's it.
capital and labor.
Yeah.
And if you have a tax system that punishes capital and labor, you're going to get a lot less of it. You're going to get a lot more consumption and leisure, which is the way economists look at it.
All
But
right.
with a fair tax, you're going to get a lot more formation of capital and a lot more labor, and that's going to increase your ability down the road to have consumption and leisure.
That's right. That's right. This is great. We're getting some great comments in. We get Geza Kovacs. I'm going to get to you. I have a soft spot in my heart for Hungarians. So we'll get to you. Thank you very much for coming. We're going to get to you. I love it. All right. So let's get going. So now maybe anything else? Or we know what we need to get into now. I think the prebate, because the criticism we're going to get, Jim, it's like, hey, what are you doing? We're going to be taxing groceries. Families are going to be like, what are you doing? What's wrong with you? People who don't have money aren't going to be able to afford groceries. What's wrong with you, Jim? Why would you do something so heartless?
Sure. Well, you're absolutely right. If we didn't do anything with the fair tax and just left it a sales tax, it would be regressive. And just to explain for people what regressive means, let's say you have Jeff Bezos, Steve Forbes, and Elon Musk in the grocery line with identical carts of groceries with a single mom on social assistance, and they all have to pay the same sales tax. That's going to hit the single mom a lot harder than it's going to hit Jeff, Steve, and Elon. So what we do, there's three things I want to talk about, but the most direct way we deal with it is we have something that's a little bit like the standard deduction. And it's called the family consumption allowance, or in our jargon, the prebate. And this takes a little bit of time for people to wrap their heads around. But every household in the United States whose members are lawful residents, so that means they've got to be either U.S. citizens or green card non-citizens, get a check from the Social Security Administration, because there's no more IRS to deal with, because you don't need the IRS. It's a sales tax, and it's collected by the states. We'll get into that in a minute.
Great. Yep, I was going to that. Yep.
Yeah, but so you get your payment from the Social Security Administration to untax the household for consumption up to the poverty level. It's whatever HHS says the poverty level is. We don't make it up. And so up to the poverty level, nobody in America who's lawfully here pays a dime of tax on consumption, which you can't say today, because today the payroll tax taxes the minimum wage earner at McDonald's on the first dollar. So
yes, absolutely.
Yeah, above the poverty level, everybody pays tax on consumption, which is the operative word here, at the same rate, but on above the poverty level, you have a certain amount of control over your consumption, which you don't have over your income. So a couple of other things I want to mention.
So essentially, but I just want to back up on this. So essentially what people would have to do is file essentially a financial affidavit.
Absolutely not. All you have to tell the Social Security Administration is who's in your family and what's the family size. That's it. Nothing more.
Oh, everybody gets it.
Everybody gets it.
Oh, all right.
It doesn't matter whether you're Steve Forbes or whether you're a mom on social
I'm like,
assistance.
well, if you're going to track, what people can afford to pay, well, then you're going to track their income, because people can lie about their income. But you're just like, no. Let's just get rid of all of that. Hey, look, everybody's entitled to this amount of tax-free purchases a year, basically.
Yeah, we don't like to penalize people as they improve themselves economically.
All right, well, I like that.
What you have is everybody gets it. Doesn't matter who you are, what your skin color is, what your religion is, anything like that. You get the prebate, as long as you're not
you're legally in the country,
a non-citizen.
Okay, you're legally here.
You're legally here.
You're here legally. Whether you're, now you won't get the exemption. You won't, obviously, right. And here's the point: you won't get the exemption if you're a tourist, right? Because you're not a resident. So no, you will pay tax. The person visiting the U.S. will pay the fair tax immediately. There's not going to be something they can get out of.
That's right. You pay tax on your hotel room in New York City. You pay tax when you buy your baubles or whatever it is.
Yeah. So all right. So yeah, here it is right here. Thank you. Fair.
If you
Yeah.
send it
No
back to
affidavit
Germany,
needed.
maybe you can get a rebate. I think that has to be worked out. But
Yeah. Oh, okay.
if you're in
Yeah,
the
that
United
might be.
States, you buy your theater ticket on Broadway, you go out to dinner, you pay the tax. And it's as simple as that.
Wow. All right. I like
So
that. All right.
that's
All
what
right.
happens.
You came. All right. All right. I like that solution because there was, I thought you guys were doing something different. So all right, that's very good. All right. So we went over that now. Now, so there is a rebate eligibility though, and I guess so because that would require some sort of income affidavit though, wouldn't it? If you're going to say, hey, look,
No.
you want to? No. Okay.
The government no longer knows what your income is because there's no income tax. What your income is none of the government's business. So we don't measure income.
Oh,
any
wait
longer.
a second, but wait, because it's like, well, is it a rebate or prebate?
In our jargon, we call it a prebate because we pay it at the beginning of the month, every month. It's the rate is 23% tax inclusive. In other words, discount, not markup. But we split that into 12 even pieces, and at the beginning of the month, you get your poverty level tax paid to the household at the beginning of every month. And then when you go to the cash register, you pay the tax, but you've already been reimbursed at the beginning of the month for tax up to the poverty level. And so what you choose to spend is up to you.
Oh, okay. That's much different than what I thought it was. All right. So,
Yeah.
so that people get money every month, and then, but that's it.
That's right.
And then you pay taxes.
The checkout counter doesn't ask, sir, what was your income this month? So let me figure out what your prebate is at the cash register. That doesn't happen.
Okay.
You get paid at the beginning of the month,
Right.
the prebate, and if you whatever you choose to spend is totally up to you. It's nobody's business but yours.
All right, Jim. I appreciate it. I'm
understanding.
I'm understanding the FairTax much better now. Thank you. I really, and some real thought. I got to say, some real thought went into this. So sure, no doubt, right? So okay, we have that now. Okay, let's just get into it, though. I mean, one of my beliefs is that the real Constitution of the United States of the government, America, is the tax code, because there's so much opportunity for mischief. And really, since the beginning of our country, the tax code has been used. And I would say the Whiskey Rebellion of 1791. George Washington wasn't the good guy. He was not the good guy at all. He betrayed the very people that made the War of Independence possible by imposing a excise tax on whiskey, again, that was designed only to impact the rural parts of the country that use whiskey as a commodity. Meanwhile, the people on the East Coast, well, they had some whiskey, they paid a little bit, but no, it was designed specifically so that rural interests would be paying for the bulk of the government, and then the government would do infrastructure, which is basically giving money to their buddies, to their sponsors. Right. So that's one of the problems that we have. So why wouldn't the same political forces that created this evil thing that's ruled over us that no one understands, why would those political forces go away to say, oh, well, the FairTax here, there's nothing we can do. There's no one we could influence. There's no one we could donate to. There's no lobbyist group anymore. And really, one of the things I would point out as a huge example of this is that, look, if you're powerful, you get the law. And one of the most powerful lobbies in the country is actually the life insurance lobby. The life insurance lobby is so powerful, they have life insurance proceeds exempted from taxation. Now, where this comes into play is that if you are truly wealthy, that is, you have a lot of assets, you might not need to work for a living, it's so incredibly, well, I wouldn't say easy. It takes some work, and you have to have the right team, but you can completely avoid all federal taxation, all state taxation by using a private life insurance policy wrapper around your entire assets, because what you're essentially doing is you're living on the death benefit of your policy and you just pay back what you borrowed when you die. And so it's one of the ways. So there is a way legally right now. The wealthiest, and that's why it's a joke when people say, "Oh yeah, the wealthier you are, the more tax you pay." It's like, no, the harder working you are, the more in taxes you pay. The wealthier you are, no, wealthy means you have options. So there's an example of where some powerful lobbyist group exempted a whole bunch of people, who might be my clients, some of who might be some of my clients, from taxation. And so again, why would they just not be interested to say, hey, you know what, we got to make sure we exempt whatever, not to, obviously the life insurance lobby would lose any reason to lobby now because it's not a retail transaction. So they'd be, okay, great, it's tax-free now, So it's not them, but other people.
Oh, I love that question.
Oh, good.
No, because obviously what George Washington did was he switched the tax from tea to whiskey. And so he was picking on the Western farmers in Pennsylvania. And the Western farmers said, hey, why are you picking on us? And that's why they rebelled. And that's why George had to put on his army uniform again and go out and quell the rebellion. Fortunately, he didn't hang anybody, which was the modus operandi at the time. But
Hamilton wanted to hang him. Hamilton wanted to hang him.
But I think George said
the
no.
The unelected Hamilton wanted to hang them all.
Yeah, but here's what happens. The fair tax applies across the board. And what happens is that a merchant has to give a receipt. I suppose these days it would be an electronic receipt, but it's the same thing. And people see when they look at when I go to Starbucks and I get the receipt, I see how much the federal government costs, except maybe for borrowing, but that's another subject. So if I start to see that the federal government is exempting green eggs sold on Tuesdays, Thursdays, and Saturdays, I'll start to say, wait a minute. If you're going to exempt this group, then I have to make up for the shortfall by paying tax at a higher rate. And that's not fair. So I'm going to go into my own little whiskey rebellion. But I think that's somewhat of a check to say, look, the fair tax applies across the board. We take care of the regressivity problem mostly through the prebate. I think we also get rid of the Social Security, the payroll tax, which is regressive, and pre-tax prices do drop in the production area, but mostly the prebate, and that's probably the best mechanism we have. Now, is it perfect? I think of the fair tax the way Winston Churchill thought of democracy. The fair tax is the second worst form of raising revenue for the government. The worst way is everything else. And if you think about it, that's true. And I can't think of a tax system that would be a fairer way to raise revenue for the government in a way that is transparent, efficient, friendly to economic growth, fair, unintrusive, and non-discriminatory. And so I think that's probably the best answer you can get for why the lobbyist groups might be held at bay. There's no guarantee what's going to happen, but
and I would see that, because it's this is how it would go, right? It's like, okay, there's going to be something that people need to buy, and it would say, you know what, this thing is so important for people, we shouldn't be charging any taxes on it. That's how it's going to go into play. And so, that's how, and I just pick whatever it is, whatever it is, like, oh, but this is such an important thing for people to have because, okay, well, all right, so you know what, maybe this can help me answer my question. So does the fair tax apply to services?
Yes. Which is something that isn't taxed today.
Wait, law services? Wait, you guys are
yes, saying. Anthony. Austrian attorneys and German attorneys have to charge VAT on their services. Right, so why? Yeah.
No, it's kind of.
I know I'm not going to make myself popular by saying this.
I'm bringing up one of my points, because I'm in the great state of Connecticut, which used to be a tax haven for New York. That changed a little bit. That changed a little bit. one of the things that they always do is they always like, we're going to start charging sales tax on attorney fees. But I just sit back and relax because I know one thing. Well, mostly every legislator, mostly everybody in Harvard is an attorney. They might be married to attorneys. So the attorney lobby is incredibly powerful. So it's always proposed. I always see it proposed. We're going to start charging sales tax on attorney fees. I'm like, nah, they're not going to do it. And they never do. So that's one of the things too, is like, well, how do you fight the attorneys? That's, you're going to be like, oh, wait a second, because there it is, Jim. Hey, this is so important. Someone has the right, because I got an argument there. Yeah, wait a second. Let's suppose this. Someone is charged for a crime. Someone's charged with a crime. And now the attorney that they're going to hire is going to be $50,000, right? An amount way over whatever the prebate's going to be, whatever the amount's going to be. Let's just say it's way over, okay? So now this person's like, well, why do you need that money? Well, because I need to get the best attorney I can. But that person may actually just be may be destitute, and they're trying to protect their very important interest. And so you're going to have attorneys breathing down your neck to say you are restricting people's constitutional right to protect themselves from a government and their right to counsel by imposing fair tax on attorney fees. So that and it's not going to be me. I mean, maybe me, right. But there'll be about 200,000, a million attorneys arguing for that very thing, to say this is a violation of civil rights. What would you say to that argument?
Well, if you're going to have attorneys and doctors and other people who are going to come up with heartstring arguments that erode the tax base, hopefully people are smart enough to see that if you're going to give a break to this group, that group, and the other group, you're going to have to raise the tax rate, and people are going to see that when they buy their cup of coffee. So, and you don't see that today because the corporate tax rate, for example, is a hidden tax because you can charge.
I think one problem, and so I do enjoy the transparency of it, because you're right. We have so many hidden taxes all over the place, and most people who are on W-2, they don't understand that their employer basically has to pay a sales tax on their wages. That's your employment taxes. So they don't even know that. Most if you're being paid minimum wage, no, it's costing your employer more than minimum wage.
Absolutely.
And so there's hidden taxes. And so I like that we're getting out there. But I think, and now you're saying, like, wait, medical procedures are taxable too?
Yes, but insurance. When you buy insurance, you pay tax on the insurance premium, but the insurance benefit is not taxed because you've paid the tax on the premium already.
Okay, so then if you didn't,
insurance is a special rule.
But if you paid out of pocket, then the fair tax is going to get paid, right?
That's correct. Yep. But if your employer wants to buy an insurance policy for you, they can still do it. But it's going to be what they call a special. It's a special rule, and it's called proxy buying, which and they're going to have to pay tax on it. But it's all part of the grand scheme that if everybody chips in, then we can keep the tax rate at a somewhat reasonable.
You're trying to keep it as broad as possible, right?
Yeah. Keep the base broad.
I think there's going to be some heartstring arguments coming from that. I think perhaps even more than the attorney fees too, because if someone needs a life-saving procedure and now they say, well, actually I can't afford to pay because the fair tax put it out of reach of me.
Mm-hmm. Yeah, I don't know if the
fair that's not gonna. I don't see how that's gonna be a problem. That's gonna be a problem.
You have that already in the tax code, and right now you're gonna have special. It's very easy for Congress to spend money through the tax code instead of making an appropriation. Now, if Congress wants to make an appropriation to make medical services more affordable or use market forces to make it more affordable, that's another discussion. But using the tax code is in order to do something that pulls at heartstrings is, I'd say, is not a good idea. The pressure will be there, and the fair tax isn't perfect, but I still think it's the best thing that's out there when you look at all the other alternatives.
All right, great. Well, now, all right. So, thank you for that answer. Now, I want to talk about some of the mechanics, and we mentioned this earlier. So, who's going to be collecting this? And you said something about the states earlier, which surprised me. So,
Oh,
who's going
thank
to?
you.
Yeah.
Yeah, absolutely. Because I usually don't lead with the point that the IRS goes away, because then people offer me a tinfoil hat and then they send me into the closet and they don't listen any longer. But um, because of the sales tax, 45 states already have the infrastructure in place. So what happens is the tax collection devolves to the states. And now the states don't have to agree to collect the tax for the federal government, but they get 25 basis points, or 1/4% for administering the fair tax. And I think most states will agree to do it because, and so do the merchants, by the way, they get 1/4% for administering the sales tax and administering it to the state sales tax authority. The
All right.
states
Well,
collect.
I was going to get you with that, and I was going to come with that. I'm like, because one of the problems right now, this is the big problem. One big area of clients I represent is this, that that with clients who have sales taxes and payroll taxes, and this is essentially what happens is that they become the tax collectors. The government says, hey, you have to collect these taxes. What happens if they don't? Well, these taxes are basically trust fund taxes, where they'll come and assess that tax individually to some specific person, so that a
Which are not,
corporate
by the
liability.
way, they're not dischargeable in bankruptcy, by the
And
way.
they're not dischargeable. Correct. Exactly. Now, this is what happens in many cases, because I get these people. Someone has a new bookkeeper. Somebody has an old bookkeeper. Whatever the case is, the person who they thought, their employee who they thought were sending over the taxes and doing all of this, turns out they weren't. And now what happens is the state or the IRS comes to say, okay, we're going to shut you down because you're not paying your taxes and you're stealing our money. And then the person says, oh my God, what's going on here? Well, I didn't know about this. I didn't know about this. Well, in sales tax, it doesn't really matter. The sale was done. And whether or not you were aware of it, surprised by it, doesn't matter. They're going to come after it for you. Now, with payroll taxes, if you hire a really good firm, you may be able to avoid the assessment of that trust fund tax if you can prove embezzlement. And we've done it successfully in the past. But otherwise, if it wasn't embezzlement and it's just a surprise and bad management, now you have a business on the hook for massive payrolls expenses that are not dischargeable in bankruptcy and individual to the person. And by the way, what the IRS does, if you file a joint return and you're just a business owner who didn't pay, they'll file against your wife too, who had nothing to do with the business. So that's the general, just to give you an idea of some of the abuse that goes on. So what you're saying is you're actually going to incentivize the companies who have to do the work. You're actually going to pay them.
Precisely. Yep.
Wow, what
And
a novel concept.
Then they send the money to a federal sales tax bureau, which would be in the basement of the present IRS building, because you probably need 5% of the personnel that you have today. And their next door neighbor will be the excise tax bureau, because we don't quite get rid of all the taxes, excises, and coming back to the original point of the interview, tariffs. If the government wants to have tariffs, it can still have tariffs and excise taxes. But all the other taxes, if it's subtitle A, B, or C, it's out of here. But so it goes to so basically the size of the federal bureaucracy is drastically reduced. And a lot of the IRS agents who have very good investigative skills will probably be picked up by the state sales tax authorities, who'll go out to all the dumpsters behind the bars and look for the bottles of Jack Daniels and see how many Jack Daniels drinks were sold and how much tax they ought to be paying. So it's a very efficient system compared to the income tax.
Well, and also, I mean, I think one of the things that there's a few things going on here. Okay, number one, you incentivize the people who have to do the withholding and the paying over, right? So now
Right.
they have an incentive to do it.
Mm-hmm. Precisely.
Right.
And
like,
timely remit.
Hey, look, I can make money by scamming the system, but getting risk, or I could just make money in the system.
Mm-hmm.
Right. So that's a powerful way to avoid what I think would be the biggest problem with it. And to me, because this is the distinction that I have, is that, you know, we were talking earlier before, the fair tax is a transaction tax, right?
Correct.
And in my mind, it's very easy to hide transactions. What's hard to hide is your income year after year after year. Whereas a transaction or two is like, hey, look, hey, look, here's a big transaction. Hey, you know what? Yeah, I'll pay, you know, hey, when I'm going to the grocery store, whatever, I'll pay my fair tax, sure, whatever. But when it comes down to that big purchase, that'll be the one I don't report. And hey, wink, wink. So that's the biggest problem I have. But now I see the other side really doesn't have any incentive. Like, hey, man, you're taking away my revenue if you do that. So I'm not going to do that, right? So okay, that's a very good thing. And then the other thing is that about this, I find it very interesting that this would actually be constitutional. This would actually be a constitutional tax because, you know, whatever the 16th Amendment was, and honestly, I highly doubt, after I have reviewed the documents and I've reviewed the government's response, I highly doubt the 16th Amendment was actually ratified. I highly doubt it. And the timing on it, it's so suspicious. And again, you can't even find the records of the claim that it was actually ratified. The same amendment has
that in federal court, though.
Well, we could. Well, hey, that's like expecting justice for chickens. That's the problem,
right?
Because everyone in the federal court, they should not be you know, that's one of the problems I actually have, if with our entire system as it is now, because the federal court, which benefits from the current system, and is a direct beneficiary, and every employee is, they're the ones deciding whether or not this tax is constitutional or not. Well, if you had a client that was paying you, but then you were the decider of law, the finder of fact, that would be a conflict of interest. That what I would say is no federal judge is competent to rule upon the federal income tax because they are all conflicted. They are all conflicted. They want it to be. They all have an inherent interest to make sure it's as big and powerful as it is. And that's why you can never really get justice from a federal court, because they're on one team. Every federal government gets a direct deposit from the same entity, the U.S. Treasury. They're the same team. And that's one big problem that we have. And that's why we see so much abuse, because, hey, look, what's their harm if they say, oh, yeah, that's constitutional? They're never harmed. They only benefit. And that's the biggest problem that we have. And I think that's an example why you can't get a fair hearing. They simply won't look at the evidence. And that's what they do. That's what they're like. They won't look at it. So it's not there. Their opinion is like, oh, this is a total BS argument. It's totally, no, they're just making this tax protester. Well, you decided not to look at the evidence. So, of course, it's very easy to write that opinion when you don't look at the evidence presented. That's where I think we have a huge problem with the income tax, because the conflict of interest. But now here, let's think about this. Let's think about with the fair tax. Does the same conflict of interest apply?
Well, of course, the federal courts are going to be funded by this new tax.
Right.
Well, that's the other interesting point that you brought up was the 16th Amendment. And for the benefit of your listeners, that was the amendment that provided for an income tax, because before there was I forget the name of the case in the late 19th century that basically threw the income tax out after a couple of tries. But there's a sunset clause in the legislation that says that 7 years after the effective date of the income tax, if Congress and the states, through whatever mechanism provided in, I think it's Article 5 of the Constitution, fail to repeal the 16th Amendment to the Constitution, whether it's a hard repeal or a soft repeal, the income tax sunsets, and then Congress has to cast about for some other way to fund the federal government. And if they want to bring back the income tax, they can. But we think at that point it would be very unpopular because people would see what the benefit is of the fair tax. But I think just to come back to your point, I think the federal courts are going to be funded one way or the other. And so I don't think that we'd have to worry about. So I think with
I think there's a very easy solution to this, and this is really how it should be done. And right now, right now, let's just say it is right now. We don't have the fair tax, we don't have it, but it is right now. This is what I would suggest. This is really the way to do it. Well, if you fund the federal government or federal judges, all the courts are funded with tariffs. Now, the one case they cannot rule upon is any case involving tariffs. that would be one other justice system. There would be a tariff court, an Article 3 tariff court with that jurisdiction that's funded with something that's not tariffs. That way, your judges are never conflicted. And that's really what should happen. But I think they set it up this way so the judges are always conflicted and will always rule in favor of the government. I mean, nearly every time. We could save a lot of money by firing every federal judge and just rubber stamping whatever the government wants. Just rubber stamping it, because I mean, most of the stuff is just rubber stamp. Oh yeah, sure, you want it, you want it, you want it. And it's because it's all about building it bigger and bigger and bigger. So I think that's one proposal that should just happen now. Every judge, every federal judge ruling on the income tax would be disbarred if it wasn't the federal government giving their immunity. You are completely conflicted. You are not independent whatsoever, and the funding would have to be there. So that's what I would say would be solution. And I would love to see that in the fair tax to say, okay, look, we'll pay, you know what, it's something like that so that we don't have these conflicts of interest that just that we brush away because, hey, you're on the right team, right?
Yeah, you could have tariffs and have the fair tax at the same time.
Right.
There's nothing in the fair tax that says you can't do that.
Yeah. All right.
That's a thought.
Now, I am very thrilled with our audience today. I see the comments coming in. We're gonna get to this in a little bit. So we're gonna wrap it up here. But I just want to get to my argument here. Jim, you know what it is. I just want to state to everybody that no matter the taxing system the federal government employs, they will always abuse it. They always have. So the problem is that I don't think the system of taxation is as important as replacing the system of federal government. We have a federal government, and this is the inherent tension. The federal, Thomas Jefferson was like, hey, we want a federal government that does the least amount, let's just be free. George Washington, Alexander Hamilton are totally opposite. No, the job of the U.S. government is to make their buddies the winner and punish their enemies. That is the true founding of this country. That is why Washington, D.C. is aptly named, well, not the District of Columbia part, but Washington is aptly named. That's why people are confused. Like, how did we get from taxation and representation to where we are now? Oh, we weren't there. We were never at taxation without representation. Except for that brief time, we had the Articles of Confederation and Perpetual Union. And so the purpose of the U.S. Constitution was to create a mercantile system where certain people pay for the government that benefited other people. And the whole overriding concept was American empire. We got to be strong. America's got to be strong. But when America builds an empire, Americans don't get strong, but certain people do who may or may not be American. So that's the problem that I have with sort of our government. I don't trust them. I don't trust them whatsoever. And honestly, if you think about it, the reason why Abraham Lincoln said the South couldn't secede is like, hey, you joined the Union and once you're in, you're out. Now, never mind the fact that the United States Constitution mentions nothing about our perpetual union. Now, what happened about the Articles of Confederation and Perpetual Union? That was a perpetual union. That was an insurgency against it. The U.S. Constitution is an insurgency against the Articles of Confederation, which are supposed to be a perpetual union. So a government that would do that, a government that would create a coup d'etat, essentially, and that's what Washington did, against the Articles of Confederation, is not any government I would ever trust to do anything. They're already breaking the law. They've been doing it for a long time. They're not, I don't trust them in any sort of way, Jim. So that's kind of my point. Is I don't trust them, that they'll abuse the fair tax just like they've abused tariffs, just like they abuse the income tax, just like they abuse Social Security, a state tax, any kind of tax. The taxes are how primarily the government abuses us. So what I want is a new government. That's my point. So that's my point. Now, what I would say, though, is that the fair tax is a great thing to look at, though. Because look at all the issues Jim, look at all the issues we uncovered here. Look at all the issues we uncovered by talking about the fair tax. It gives us the right way to talk about what's this government doing. So I think that people really should look into this and investigate it. And to me, it seems like a lot of the things you did are an improvement. I still see problems. And number one, the government's the number one problem. They're the problem. The government that would impose the income tax like this, how can we trust them? How can we trust them? Jim, there's we don't have time for everything. I want to get to I want to get to Scott comments, but I want you to respond to what I just said.
Sure.
Okay.
Well, one thing about the fair tax is it returns a lot more power to the people, because the fair tax puts you as the individual in control of when you pay tax and how much tax you pay, and you can't say that about the taxation system today. The income tax, the government, if you're going to take the itemized deductions, the government has to know who you went to for your medical procedures, what charities you gave to, how much your state and local taxes were, and with the fair tax, that all goes bye-bye. So it may not be the most perfect system, but I think it's the second worst system that there is, because it gives power to the people, and I think we'd be much better off with that than with the system we have today, and it would be much more responsive to your concern.
All right. Well, thank you for that. All right, we got to get to some comments now. They've been coming in. Let's get some comments here. Fantastic. Let's see here. Yeah, this is a great one. Thank you, Randy. Yeah, this should be interesting. We have a new IRS commissioner that people don't like so much. The first criticism I read about him was he was the primary representative behind the employee retention credits, and the employee retention credits were pretty important for businesses like mine that were devastated by the COVID shutdowns because the IRS shut down. Not a lot of billable hours for my firm when the IRS shuts down there. So it was really something that was helpful for me, and I was amazed with the ERC credits. I said, "Oh my God, here's a government bailout that's not going to big banks." I was like, "Oh my God, it's actually going to small employers? How did that happen? Who was behind it?" Well, now we know. The new commissioner of the IRS. So I like the fact, I think he understood look, the government's always going to be sending money somewhere, but he actually gave it to people who weren't big banks. I couldn't believe it. So what that was amazing.
Here's a comment. If you read the Daily Cost article, the new IRS commissioner was a co-sponsor of the FairTax, and the FairTax gets rid of the IRS. So how do you like them apples?
Oh, they're really coming
after him.
Oh, okay. Oh my God. I didn't. The story just came out. I got to get up on him. I'll hopefully get some articles up on that. FairTax, please share this, guys. By the way, not enough people really re-tax, and you know how consequential this is. You know how consequential this is. What we need to do is spread the word. So share this content, engage conversation with people. We try to make it interesting so that other people, maybe taxes is their number one thing, at least can understand what's going on and be well informed about all these various things the government tells us. So absolutely great advice. Borchell, thanks for joining us. Borchell told me my mic was lower before, but always appreciate having people on the side. Jason, I don't see your link. Jason Kovacs, appreciate that. By the way, Kovacs, I love Kovacs. Kovacs means Smith in Hungarian, and my boys are Hungarian. So I love, so we have other Kovacs, and the Hungarians are incredibly smart. Oh my God, are they? And FairTax going to their point here, right? Right? What do you say about this, Jim? Hey, look, we no longer have to worry about undocumented, right? And that's something that we notice. Oh, I know that for sure. If you're undocumented, you don't have to worry about the IRS. But if you're a legal citizen, you do. You do.
Yeah, you still have to go to the supermarket and buy food. You still have to buy clothes, and guess what? That's one of the benefits of no exemptions.
Yeah. All right. Geza Kovacs, another brilliant Hungarian. All right, Geza. I'm gonna try to understand. If I don't get this right, we might have to do it later. And you're saying that a 3% transition tax would easily eliminate the need for any other form of government revenue, and we would quickly pay off our national debt. Proof below. Let's see here. What she got here? What's her next one? USA federal exports, imports 5.3, manufacturing, it's okay, everything, wholesale prices, okay, so a bigger tax base, okay, and so she's calculating, he or she, I think Geza is probably.
I think that's a he.
Geza, thank you.
I speak a little Hungarian.
Oh, right on. All right. So he's calculating. Hey, look, if we have a transaction tax, that's a much larger base, and the rate could be much lower. So, what do you say to that?
Well, of course, I think the question is, do you want to put a low-grade fee on every financial transaction, or is it simply just to have a consumption tax? Um, I I personally go for the consumption tax because I think that's more transparent. But
The problem that we'd have, the problem that I would say that we would have with a 3% transaction tax is this: is it will inherently this is the problem with it. Large corporations that are vertically integrated, that don't have intercompany transactions, they'll just have one transaction, and they'll end up with a 3% sales. They'll end up with this 3% tax rate, a benefit over everybody else. How can you compete?
good point.
You're right. I mean, how can you compete? Henry Ford was a huge fan of he did it to the maximum. He tried to grow the rubber to make the tires that he would put on his cars. He was highly vertically integrated, and he could be. You know why? Because he was Henry Ford, and he sold 10 million Model Ts, and he had a ton of money. So if you want larger companies, I think that's the problem that you would have with it. The large companies would benefit ungodly for this. So any small business, unless you are vertically integrated from beginning to end, has additional transactions that they're paying before them and ones after them. So that's what I would say. I love the idea that it's a bigger base, but it could be circumvented. I think that's the problem. But always looking for. I really enjoy your thoughts. I mean, this is fantastic. And let's see. Let me get down here. A bunch of great comments here. And it would. I mean, the thing is, that it would pay off the debts, but I don't know if it would actually work out correctly. And you go to Super Chat. You all can see it, guys. So thank you so much for your in-depth. You're bringing up some really good points, but that's really the problem that I think would happen with you. Do you understand my point with that? And it really does. It can't really. That problem of the vertical integration can't really happen with the FairTax, right? It's only on those that one-time retail transaction.
Right.
And once it's good, it doesn't apply.
Yeah, it's irrelevant whether you're vertically integrated or not.
Yeah.
So, because the fair tax only applies to the final point of retail sale, and it wouldn't discriminate against, it wouldn't favor a vertically integrated industry over a one that's, let's say, horizontally.
Yes, like most of them. Very horizontal, right? And here we go, fair tax here. Name dropping some big names here. I mean, you guys did think about a lot. I mean, there's a lot of thought into this. I could say that. There's a lot of thought into it. And I think, this is what I would say. Look, with the constraints under which you're operating, that essentially, because this is the constraint under which you're operating is like, how do we find a system that will replace the current amount of revenue? Okay, that's what you're trying to accomplish. And so that is your goal. And so I'm like, all right, well, look, if that's the truth, then the fair tax really, deserves sincere look. But if we remove that constraint to say, well, look, why don't we just cut the fund? Hey, look, the federal government's out of control. Let's make sure they have less money. Let's make sure we have less power. Then the fair tax wouldn't make sense if that was the thing. But under the current restraints, then absolutely it does. And the hard work that your economists and everybody has put into this is showing, because that's the hard problem. The income tax is taxing has a huge base, right? And a big rate. And then there's more income taxes on top of that are hidden, right? People don't see it. Getting a lot of new visitors here. I always like comments like this, Wanda. The IRS is not an organization within the United States Department of Treasury. Maybe. I don't know. A comment like this is a comment probably 10 years ago. I'd blow off and I'd say, oh, I don't know, Wanda, you're wearing a tinfoil hat. But I'd kind of like, no, tell me more. Who knows? Let's see here. And here it is. Here's Randy putting in, the family consumption allowance is basically that what's tax free. Okay, makes sense. And it prevents that you can't, it basically gives you like a homestead exemption, right? That's kind of what it's like, a homestead exemption, which we all should be protected from taxes. Hey, this is great. I love it. Papa, I'm glad I did this for some here. And this is a nice breakdown of tariffs and how they can actually. Yeah, right on. Thank you so much. Right. That was, well, they were done right at one point. And they've been done wrong. So, that's what we know here. You shop until you spend more than poverty level. Okay, fair tax. There it is. Right. right? Unless, as I said, you could be it's how do you define poverty levels? What is that, right? And you're like, well, we're not going to define it by looking at your AGI.
No, they have. Yeah, it's whatever HHS says the poverty level is, and they have the ferrets that go into grocery stores and clothing stores and decide what the poverty level is nationwide, and that's basically the same as the standard deduction.
Yeah, all right. I mean, just the poverty level, there's income and there's assets, right? And sometimes I see poverty tests that are based on income.
Right.
So that's not necessarily fair, because you have a bunch of money and you're just not using it. So this is something to think about.
Well, of course, if you have a wealthy person who has a lot of assets but doesn't spend a lot, then what does the wealthy person do with the assets? If they didn't hide it under a mattress, then they invest it either in the bank or they put it in some kind of a working industry, and the rest of us benefit from it economically. So. That it's kind of a wonky argument, but that's the way I look at it.
Okay.
It's potential.
Great. Wanda's following up here. The IRS appears to be a collection agency working for foreign banks and operating out of Puerto Rico. Well, I can answer the Puerto Rico for you. Puerto Rico, working for the IRS is a good job. And so the hands down best IRS service center in the country is actually in Puerto Rico. That's where they are. So that's why you'll get them. And if you can actually get to the Puerto Rico IRS, their staff is, again, much smarter than everybody else. And I've been able to get some help there. So that's where they are. And as far as working for foreign banks, you're kind of right in a way. You're kind of right. So I'm starting to understand what you're doing there, because the foreign banks, FATCA is collecting all this information that goes to the IRS, and the IRS really doesn't even do anything with the data that it gets. So I'd be curious. I'm not going to put the tinfoil hat on you, Wenda. Not at all. I want to hear what you have to say. I want to hear more of what you're going to say, and I hope you subscribe to the channel. Interesting here. FairTax, prisoners lose their prebate. Is their cover? Oh, that their stay at the BNB. We call it vacation. Here. Sometimes clients have to go on vacation for a little bit, and we follow up with them. Okay, that's interesting. Oh, here it is. All right, we're getting more from Wenda. I like this. I appears to be a Monday long. Yes, you're right. Extort. Yes. Conspiracy engagement. Oh, okay. Yeah, no. All right. No. We're speaking the same language there. Okay. You're starting to make a little more sense here. Thank you. Let's see here. Okay, we're talking about, and this is, I think the thing is that you have a lot of people who benefit from the current system. Of course, they're not going to, right? They're not going to come out in favor. And there's a lot of people that benefit from this. I mean, let's talk about the tax industry. Oh my God, right? Man, they're going to come out against this. I can tell you that. Let's see here. And here's the prebate. So this is the monthly one for 4 persons at 200. Oh, okay. All right. So that's what they're going to get each month. And hey, look, spend whatever you want. But that's going to cover $800. So 800 times. That's going to cover about $4,000 in purchases, something like that. $3,000 to $4,000 in purchases will be tax-free. Essentially, that's essentially what happens. Okay, that sounds so bad. And then this is kind of the truth here. Yeah, it's the 2% of the tax code is designed for W-2. Yeah, and that's one problem that most people. I mean, it's just really something that the income tax hurts those who are trying to improve their station in life the most, right? If you tax something, you get less of it, right? I mean, it's really hampering everything, and I think that's something. Randy, tax evasion for tax and pleasure. Yeah, it's both legal and illegal. And by the way, the richer you get, and I happen to know this. I have two cases of which whistleblower complaints were filed against some of the wealthiest people in America. You wouldn't believe what happened. Despite giving complete evidence of outright fraud, the easiest cases to prove, the IRS didn't bother going after the wealthiest people for their tax evasion. So actually what the IRS whistleblower program exists for is to make sure that the truly wealthy, the truly politically connected never get prosecuted, rather the people who aren't. those are the people who get prosecuted. That's the ugly truth of this. And so it is not so good here. Yeah, this is getting back to Gates, the 8 layers of 3% tax would create the same thing. So we're talking about that integration. But if we had that one integration, it's a 3% tax, right? And so all right, let's see here. Let's go down here. We're getting, oh man, this is fantastic here. And the corporate tax is a hidden tax. We know that, right? We know that it's a hidden tax. That is a hidden tax. And and fair tax can be basically best stated as a retail tax only, right?
Yes, Gaza, that's correct. Yeah.
I got to do this because here's a big debate on the flat tax. I'm going to have to do, I did one on what's better, the fair tax versus tariffs. I got to do one on the flat tax because I'm like, come on, we already have flat taxes. We already have them, guys. They're called Social Security. They're called Medicare. We already have it. And it's 15.1% already. We already have the flat tax. So you got what you want. We just have everything else too. Yeah.
And how long will the flat tax on income stay flat?
Yeah, right. Yeah. Oh, yeah. Thank you. This is the greatest compliment I could get. Anthony is becoming more like Irwin Schiff. Thank you so much. Thank you. Irwin was a brilliant guy, and he really was brilliant, and he was way ahead of everybody else on this stuff. And he advised people not to pay taxes, and he was trying to get a tax protest movement going. So the government got him on evasion of taxes, and to really and put him in jail. And then this is what they did to him. While he was on his deathbed in the prison infirmary, they had him handcuffed there. And the guy had a few months left, and they wouldn't even, did a bunch of time. They wouldn't give him early release so he died home with his family. But rather that's really that's what the taxes mean to this government. That's what they mean. They will make an example out of you so you are punished beyond, and so that no one else gets the same idea that you had. So I take that as a sincere compliment. Thank you. Ooh. All right. Yeah, I think you could, Randy, because the one thing I could say about it, whether it's a good idea or not, it appears to be constitutional. Where the U.S. income tax certainly isn't, because you can't have it. Essentially, it's this: have a federal government with limited powers, or have an income tax. Pick one. You can't have both, because with the income tax comes the requirement to remove the Fourth Amendment. Hey, we can ignore the Fourth Amendment as long as it involves tax. So, that's why I say the tax code trumps the U.S. Constitution time and time again. So that's where I'd say, yeah, it's far more here. And now I don't know. So I appreciate this. Trump is grasping at straws. He had no plan for immigration report in place of Obamacare. Well, I would say you got some good points. We got to hold Trump accountable. It's kind of funny. Obamacare is still with us. A lot of the benefits aren't there, but that 3.8 net investment income tax, a flat tax. We have that one. We already have that one. So yeah, you got to wonder what promises he's going to keep when he hasn't done this. Oh, Johnny come lately. I know what you're saying here. This gold shall destroy Fed. I don't think the Fed. I don't think the article is in there. I know exactly what you're talking about there. Government spending Doge, maybe. When we got that, that's something else. The Fed is bankrupt. And God, I want to get into this because we don't really have time. Well, one of my points is the Internal Revenue Service doesn't collect revenue. It actually doesn't. It's disguised as a revenue agency. But the U.S. federal government, and this is one of the biggest problems with it, you can't tax protest the IRS. You can't. You can't say, I don't like that war overseas. I'm not going to pay my taxes. You can't do it because all the revenue the government gets comes from sales of T-bills. So the government gets money that we don't care. What the IRS is there to do is to destroy currency so that hyperinflation doesn't go on. So you have the Federal Reserve that creates money and then hands it out to their buddies, but they don't want to take it away from their buddies. They want to take it away from you. So some people get money and some people lose, and that's been going on since 1913. So the problem that I have is that inherently, if we wanted to get to a fair system, with the fair tax, we also have to get rid of the Federal Reserve, no question about it. And then there's severe problems with the Federal Reserve. It's not constitutional in any sort of way. But again, we have a federal government that's all funded by the Federal Reserve. They're on the same team, huh? See here. Let's see here. It's the oh my God, it's going on. We're gonna have to wrap it up. This is great. I really wanna follow up with you. There are. All right, I got great comments here. All right, we're gonna have to end it here. I want to just thank everybody so much for these comments. Thank you so much. They're still coming in. All right, all right. I need to shut up. There it is. I'll shut up now. I do talk a little much. I got to be honest. So fair point. So Jim, I'm going to give you the final words here. I've been talking a little bit too.
Okay, well, thank you, Anthony, for having me on the podcast, and it's always a pleasure. And if you want to learn more about the FairTax, go to www.fairtax.org, fairtax.org, and if you like what you see, scroll down to Get Info, and you won't get spam because we don't sell the list, and you'll get our my weekly Grassroots Corner, the Chairman's Report, and you'll get something called the FairTax Power Radio, the FairTax Guys. So it's very educational, and thank you again for having me on.
I want to thank our audience for showing up today. We have a whole bunch of new people showing up, and thank you so much. And I can see why, because you guys really put a lot of thought in this. Whether you agree or you disagree, you guys did put a lot of thought in this, and I've thrown my best at you. I'm still just back to my original argument. Well, your constraint, we need a different constraint. We need a different government. But under these constraints, I would say, got a lot of positives here. So I want to thank you so much for joining us. And I would say, hey, look, we've never had tax this important, so many tax things going on. This is the time, guys. Over the next 6 months, this is going to be the most critical time that we pay attention to what's going on. So arm yourselves with all the facts. Get everything. And the best way to do that I can think of, subscribe to this channel. Turn on your notifications so you know when we go live. We like to respond to our live comments. They're great. They make for a better show. So again, I want to thank Jim. I want to thank all the guys at FairTax. I also want to thank the great John Richardson, who has been helping out everyone so much in finding real meaningful tax reform and really seeing it at that human level. I want to thank him so much for all of his work. This is Anthony Parent for IRSMedic. Thanks for watching.